Hey there, welcome to another news. I'm Matt Margolis.
And I'm Lauren Weldon, and we are Margolis Weldon. We are estate planning and elder law attorneys, and we help people protect what they value most. The goal of this program is to share information on topics we feel would be interesting and timely.
And today we are fortunate enough to be joined by Brian Gordon. I've known Brian for probably my entire estate planning and elder law career, so the last probably close to 10 or 11 years. Brian has nearly 3 decades of experience in long-term care insurance, joining his father, Murray Gordon, at MAGA in 1990. In addition to his personal long-term care planning and consulting, he's trained hundreds of insurance professionals and conducted informative seminars for senior and retiree groups, banks, and corporations. He's also conducted CE courses for financial advisors, CPAs, attorneys, and insurance professionals. Brian specializes in both standalone traditional long-term care insurance and hybrid asset-based life and long-term care insurance and annuities, and has collaborated with carriers regarding product development and marketing. Over the years, Brian has been recognized by his peers as one of the top long-term care insurance professionals, and nationally syndicated financial writer Terry Savage, who I know many of you know, calls MAGA my advisor on long-term care policies. He's presented to the Illinois chapters of the Chicago Bar Association, National Academy of Elder Law Attorneys, of which Lauren and I are members. The Financial Planning Association has developed long-standing relationships with the top 3 fee-only associations in the country. Brian has been quoted in numerous publications, including the New York Times, Main Street, the Huffington Post, Kiplinger, Chicago Sun-Times, Chicago Tribune, and many others, and is considered an expert in his field. Thanks, Brian, for joining us today.
Thanks for having me, Matt and Lauren.
So Brian, let's get started. Can you tell us a little bit about MAGA and what sets your company apart from others in the long-term care insurance industry?
Absolutely. So my dad actually started Murray A. Gordon Associates originally in his basement of his townhouse back in '75. And back in those days, Dad worked in smaller communities, worked with a lot of farmers, and did a lot of work with different ARP chapters, and really educating the public on what long-term care insurance was all about, and really what the risks were, and what their Medicare and their health insurance did when it came to covering long-term care. A lot of people have a lot of misconceptions with that. And so we refer to ourselves as a full service long-term care insurance agency because we help educate the clients and the advisors. We can write the product for them if they decide insurance is what part of their plan is going to be. If they don't, we usually try to send them to you guys so that they can get a plan in place if they don't have insurance, and also just really make sure that they get the right plan for themselves. And if they ever needed to file a claim, they know to reach out to us, and we're going to work with their family and help them get through that process.
Great.
And I can vouch for a lot of what Brian just said. We've seen it firsthand with some mutual clients that we've worked on over the years, and just how helpful him and his firm can be when really any questions arise and folks have any issues that with their policies. And Brian tends to be our go-to when it comes to any issues that we see with long-term care insurance or questions that we have. Brian, one question that always comes up with clients, and I never know the answer, and I feel like I've heard I get answers, different answers all across the board, is when somebody should consider buying long-term care insurance, and maybe when they should consider it, and also maybe if you can discuss like when it's too late, when people can't buy it.
Absolutely. So that number has moved over the years. When I started back in the business over 30 years ago, the average age of my client was about 73, 74 years old. And the products back then were very reasonable, extremely underpriced. And so we were able to write people when they were in their 70s. Fast forward, 15, 20 years of me being in the business. And today the average age of my client's about 54. And we don't so much look at an age of an applicant, because I have clients that come to me in their 30s because they're just in the financial position at that time and they're thinking about it to get it done. And I always say to people, as long as they have their financial house in order, they don't have a lot of debt, maybe a mortgage and a car payment, no student loans, no credit card debt, and they're saving money for the retirement, they can really start looking at any age. But right now it's about age 54 is about the average. And the people that we deal with are planners. If people are more reacting to problems and they are not thinking of the next moves, then long-term care might not come until later on down the road, if they ever really think about it. A lot of times we rely on their centers of influences, their financial advisors and people they surround themselves with to really tell them that they should be looking at long-term care and talk about what that financial risk is to them and their family.
Is there, I know that there can be issues with getting underwritten for long-term care policies, just like life insurance. Is there what would potentially make somebody ineligible for long-term care insurance, both from a healthcare standpoint or from an age standpoint, if there is an age limit?
Yeah, so age, when I first started in the business, we had one company that had age 90 and over rates. So it's amazing. I wrote a few 90-year-olds back in the day, but today that does not work that way. And with COVID, it's even gotten tougher. A lot of the companies really clamp down because they do require face-to-face interviews, depending on the carrier and depending on what the person's health looks like, ages 60 or 65 and over. And that's a big part of the underwriting because they really need to get in there and see people. So it created a lot of problems for those folks. But right now, I mean, we're quoting people that are in their 70s. I think COVID has made some more people think about this. And making sure that it's something that they talk about or they put on the table for themselves, more or less. And I think that, I think that it's something that people who have gone through it and have dealt with this before, they understand the problem a lot more than people who have just kind of heard about it and from their friends. And at my age, I never thought in a million years that I think probably like 70% of my friends right now are dealing with something with their parents. Some type of health problem, which kind of goes to that statistic they always throw around that, 60 at age 65, 70% of people will need some care of some sort. So, that's kind of what we're seeing out there.
Yeah, interesting.
So when I was in law school, I actually worked with a professor who just had a personal interest in long-term care insurance. And I did a lot of research on the historical trends in the industry over time. And I would say that the long-term care industry definitely has trends, right? Like the products that were out there and what was available has changed over time based on a variety of factors, but some of them underwriting, some of them the industry itself. But what do you think are some current trends in the industry, and where do you think the industry is headed?
So I think some of the points you made about the underwriting, and when I first started the business, it was way too liberal. It was way too easy for people to get policies. They didn't check medical records. Today, we see the companies, and I would say in the last 4 to 5 years, have stepped up their underwriting. We have more people that in the pre-screening process can't even get policies. Like just in the fact finding on our side of it, I've already got conditions that are going to be problematic for that as well. I see more of a trend of what I've always wanted to see people do is to have a paid up policy of some sort. We did policies in our mid 30s, my wife and I. The last thing I wanted to see was this premium in my 80s or 90s when my income might not be as good as it was when I was working. And that's something that I see a big trend in that, where that's something that a lot of our clients are considering, and we're really recommending it more today for people to do that. And the hybrids are becoming a little more popular, but we do have some standalone policies that do provide some really good coverage, and we can even do 10 pays and get those paid up as well. So I think that's a big area we see that's trending there. I have a lot of people that really are talking to me. They only want to be at home healthcare. They don't want to have a policy that covers them in a facility, and those plans do not exist out there. And I tell people that what you read and what you hear is not always true. There are great facilities, there are great assisted living communities for us to go to, as the three of us are very well aware of. And I said, you just don't know what position you're going to be in, and you need the flexibility for all levels. So that's what I kind of see things going. And I see people talking about it more as well with this. And the other thing that we don't have a lot of time, and I want to go too deep in it, but the state of Washington just came out with a new tax that's going to be hitting people in January of 2022, and it's called the Washington Cares Fund. And that's basically where a person's going to be taxed 0.58 of their income, no cap on it. And there's also 11 other states in line to do this right now. And the great news is our state's in line for that, for a very interesting product that's really not going to provide people the coverage that they think they're going to have. But the good news is if we already have coverage, we can opt out of that program if it does come to Illinois or to the other 10 states that are talking about it right now as well. So that's something that people are pretty surprised about when we're seeing that. And I'm getting a lot of calls from our Washington advisors. And I think 3/4 of the companies we work with in Washington state are no longer writing product right now. They're not letting us write new business because they're getting too much business from the state of Washington.
Yeah, that's definitely an interesting trend. I think that we'll be seeing more legislation and other things like that as these states grapple with the aging population and the economic cost between COVID and what was already a problem in terms of long-term care costs for the state. So we'll see how that works out for sure.
Absolutely.
Well, very, very interesting information, Brian. Is there, before we let you go, and again, we really appreciate you spending some time with us today, and I think everybody that listens will get a lot out of this. Is there one last tidbit you have that, is there something like if people should think about one thing as it relates to long-term care insurance, is there something you can think of that they should know or that they should consider?
There's a couple things. One is that when people buy long-term care insurance, we're not buying it to cover 100% of the costs. We're buying it to allow our families to make good decisions and things like that. And my comment to people is whether they buy insurance or they're going to self-fund or they're going to go on to Medicaid, if you actually love your family and love your kids and people that are going to take care of you, give them some direction. It's like throwing darts against the wall, trying to figure out what people want to do. And I think no matter what it is, you got to give them a plan of some sort. And that's what I tell people all the time.
I think that's great. And I think that that's a useful piece of information in a lot of different areas of professional areas, including ours.
Yes.
Well, Brian, thanks again. Really appreciate you being with us today. I'm going to turn it over to Lauren here, who's got some fun stuff to go over.
Yes, our trivia from last time. So the question, if you recall, was which country has the largest population of horses? And it's the USA, which is home to more than 10 million horses. On the spirit of closing down summer, I thought I would do something nautical for our trivia question this time. The trivia question is, which is the fastest fish in the sea? So think about that, and the answer will be given to you all the next presentation that we have. So thank you very much for tuning in. I'm Lauren Weldon.
And I'm Matt Margolis, and we'll see you next time for some other news.